Hey guys, welcome back to another video. It's Jason Pizzino. Yesterday I asked on my Instagram if there is anything you are finding difficult about getting started in today's market at such low prices. The stock market's low, crypto markets are low, property markets are at their peaks, but they look like they'll come down as well. So there's many opportunities come up. So I asked, what is your biggest hurdle to get over whatever it is going on in your life to be able to get into these markets? And so I got a few questions come through on my Instagram. So I thought I'd answer this one here because there's a lot of opportunity within this question, especially for the international guys that are watching, all you guys in the US, Europe, anywhere that has a better currency exchange against the Aussie dollar, which is where I am. And the question was, are Aussie stocks like Qantas better to get into now as opposed to US stocks, considering how low the Aussie dollar is? And that came from a follower of mine on Instagram. So thank you very much to them. If you want to ask questions quickly, go hit me up on Instagram. Essentially with this one, I'm looking at it in terms of a few different pieces. Obviously one, we have the exchange rate. So if you're in Australia earning Australian dollars, it's not really going to make too much difference if you're buying within Australia. If you want to go and buy internationally, like with US stocks, you've got to price it up as well. That the Aussie dollar is so low that whatever you're buying, you could lose money on the actual price of the stock. For example, if you're buying Apple stock, Google stock, Tesla, whatever it is, US stocks on some of the platforms like the apps that you can get, Robinhood and such, that you can buy fractional shares in or full shares, you're buying them and they're US stocks. You've got to factor in that the price of our dollar is so low at this point. So if the Aussie dollar goes up in time and the stocks also go up, you're losing out on the dollar exchange. If the Aussie dollar goes down and you're holding US currency, US stocks, then you're going to make even more money on that. Generally, it's not so much of a big deal because the exchange rate doesn't fluctuate too much. Historically, you can see the Aussie to US exchange rate generally sits around 70 to 80 US cents. That's kind of the known out there. That's what people believe it to be, between 70 and 80 cents. Historically. But right now, Aussie dollar is around 55 to 62 cents. That was the low at 55, and we've kind of seen it bounce around at 60. So it's trading considerably lower than historically what it sits at. So when you're getting into these stocks, that may be something to consider as well. If you're international and you're earning US dollars, or even if you live in Australia and you're earning US dollars because you have some sort of online program or online service that you're offering, then you could use those US dollars, buy Aussie dollars cheap. Then you can also buy the Aussie stocks. And so if and when the Aussie stocks go up in value, then you might be making money on both sides. You're making money on the currency exchange. So the fact that the Aussie dollar is going up against the US dollars that you once had. So you earned US dollars, you sold them for Aussie cheap, you sold your US at a high rate for low Aussie dollar prices. And then you also bought Aussie stocks cheap. So you could get the compound effect both ways, meaning you could get it as the market goes up and the Aussie dollar goes up, or it could go the opposite. The Aussie dollar could keep going down. So you've just sold your US dollars and the US dollar continues to go up against the Aussie and the Aussie stocks continue to go down. So it's a compound effect. That's something to consider as well. And I think it was a really good question because of these double factors. The double factors being one, the currency, and two, the economic climate in Australia. So you really have to understand what it is that you're getting into and what you believe the future to be for the economy of Australia if you're looking to buy into Australian stocks. Personally, I don't see it going too far south, but I see better opportunities out there in different countries. But the exchange rate could be a good play as well. If our dollar is sitting at 58 to 60 US cents and we happen to go up to 80 cents, that's 30% on your money just from holding the stock. And if the stock does nothing, you're still making 30%, which isn't too bad considering the stock markets we know historically go up about 7, 8%. Some people say 10. For us, we're looking sort of 5 to 10 years, possibly 7, 8% per year. So if you're getting 30% just out of the exchange rate going up, that's if it goes up, then that's not such a bad investment. Let's take a look at an example. And they've mentioned Qantas, and I believe they've mentioned Qantas because we know that the airlines are getting hit quite hard at the moment. So there could be a bigger bounce back, especially with airlines that we know to be part of Australia. You know, Qantas is an Australian brand, and if something was to go wrong with them, I guess people are banking on the fact that maybe the government would bail them out, give them some money to keep that airline afloat, because we don't really have any other airline here in Australia that is Australian based. So let's look at an example and just use some round numbers to get this example done. So we have the Aussie dollar, that's at 60 US cents. And for the USD, if you were to sell Aussie into USD, you would get 60 US cents. And we look at the exchange rate the other way around, USD to AUD, somewhere around $1.60, $1.65. Let's use $1.60. Let's say we'll buy 10 shares at 2 Aussie dollars. So we need 20 Aussie dollars. 20 Aussie dollars into USD. We just ask Google and we type in AUD 20, tells us it's 12 US dollars and 13 cents. So for round numbers, let's use 12 bucks. USD 12. That's to get the 20 Aussie shares at 2 bucks. Qantas was around $2. We can use Qantas. So for 12 bucks, we're getting 20 of those, whereas in Aussie, you need 20 Aussie dollars to get the same thing. If we get a 30% increase in the exchange rate, we're going to see 12 bucks increased by 30%. $12 multiplied by 1.3, $15.60. If the stock also goes up, and maybe it goes back to its old levels, and so far we know a lot of the markets dropped 30-40%, in the case for airlines, 50%. So this stock is now going from $2 up to $4. We see a double on this amount, which is 40 Aussie dollars, and then we'll see a double on this amount. So that's going to be 31.20 from memory. USD. So not only have we made 100% on the stock, but we've made 30% on the currency exchange rate. If we didn't take the currency into consideration, then we'd be at 24. So that's times 2 because it's 200%. We would be at 24 USD. So you can see that there's a pretty decent margin to be built in for the currency exchange, meaning that there could be potential growth in another area. And like I said, this could go the opposite way as well. So you've got to take that into consideration when you're making an investment from outside of the country into another country that has a different exchange rate, especially something volatile like the Aussie dollar. Now let's do the example if the currency continued to fall, the Aussie dollar. So what we're selling our US dollars into, which is the Aussie dollar. And if that continued to fall, let's see what the results will be. So let's wipe off all this part here. We'll still say we have 10 stocks, and they were $2 each. So that's Aussie, $20. So it's the same as before, 12 US dollars to get this amount. So 12 US for our 20 Aussie stocks. Spell. Let's say we lose 30% of the currency that we just bought. So the 30% of the value of the Aussie dollar going from 60 cents, 30% would be 42, but obviously for round numbers, let's use 40 cents. So our 20 Aussie stocks were 12 US dollars. Now we've lost 30% on 12. That's down to $8, 8 USD. And let's use the same increase in market value that we used previously, and that was doubling the price. So the stock price went from 2 to 4. We're going to use the same increase in stock value from $2 to $4. Currently we hold $8 US worth, which is still 20 Aussie dollars because the Aussie dollar hasn't changed within Aussie dollars, but against the US dollar, it's definitely dropped a lot. So from 8, we've doubled. Now we're at 16, so USD 16. So let's figure out our profit now. And currently the value is $16. What we originally put in was 12 US dollars. And our profit is a measly $4. So as you can see, the profit isn't big whatsoever because the Aussie dollar lost a lot of ground against the US dollar. So we're only sitting at a $4 profit. That's with the stock doubling, but the currency losing 30%. Compared to the last example, where the last example was 31.20 USD. So within this example, you can see how much risk there is in buying stock or assets in another currency. Not only do you have to take into consideration of the market itself, so whether, say, the US stock market is going to increase or decrease, but you've got to consider the currency exchange. So if the US dollar isn't your native currency and you're buying in from somewhere else around the world in a different currency, then that is also a major risk to the investment overall. At first you think you've doubled your money, but then when you look deeper into it, you haven't. You've barely made a profit and probably didn't even make it very far against inflation. So I'll just put those numbers up here for clarity. The first example, we had a $19.20 profit. And the second example, $4. That's in USD. I hope you found this video useful for investing overseas without your native currency if you're having to buy into a different exchange, and obviously factor in the exchange rate of the currency. If you did find it useful, please leave a like down below. It obviously helps the channel out a lot. It gets the video spread out there on the YouTube algorithm. Let us know what your thoughts were on this, and if you've ever invested overseas and what your experience has been using the currency exchange. I'd love to hear your thoughts down below. I'll see you guys at the next video. Maybe you can catch up with me anywhere online, Instagram, Facebook in particular. But I'll see you guys on my channel again at the next video. Be sure to subscribe and hit the bell notification so you can see the videos pop up when they are fresh. And I'll see you at the next video. Remember, until next time, have more fun to get more done.